and I think my connection's good. So I'm just going to go ahead and get started with the news and um, answer any questions that you guys put down in the chat as the call goes on. So I'm going to go ahead and share my screen. So we kind of took a glance at the news for this week at the end of or the beginning of last week. And then the week before, just to kind of see some of the stuff that was coming up. Um, Today is technically a holiday. It's Columbus Day. Markets were pretty much open in full effect today, so there wasn't really any um, market volatility issues that we would have had because of that. Um, Going on through the rest of the week, we do have some medium to low impact news, not only for the US, but for the euro and for the GBP. So it was a conversation I knew that was going to have to come back up at some point in time and kind of get us back into the Brexit talks. They're back. The talks are here. Um, we are coming up on a deadline that the UK has to meet, Boris Johnson has to meet with certain terms of the Brexit agreement. There are certain points that they're having some issues with. A lot of it deals with industry and travel and um, just some like fine nitpicky things about trade. So those are really the sticking points right now. I think for the most part, everything has been um, settled or compromised on at some point as time has gone on this year. So we'll be keeping our eye out on that. Also, just keeping our eye out for U.S. presidential news, debates, tours, and just different rallies that the different candidates have, town halls and stuff. So those things aren't going to be on the Forex Factory calendar, but they're definitely things that are going to make the markets more volatile. So we'll be keeping our eye out on that. In addition to all of this news. So tomorrow, the main things to remember are that we have claimant count, which are like employment numbers for the U.S. We have that coming out for the GDP in the morning. We also have consumer price index coming out for the United States tomorrow. So the biggest thing to remember with this consumer price index news is that we've already gotten our warning from Jerome Powell that the U.S. needs a stimulus. There's really no way around it. In order to help the economy to really be able to flourish going into 2021, according to Jerome Powell, we need that stimulus. We've kind of talked about my opinion, some of the opinions of the dollar when they first started giving out stimulus. We'll kind of go over that at some other point in time, but just know that the market has already somewhat priced in the fact that we're going to get a stimulus. We just don't know when. The market's priced that in, and you know that the market has priced that in because last week, whenever the news came out about a possible step towards stimulus being made, and then no, and then Trump saying we're going to wait till after the election, and then Trump coming back saying that he's open to it, but it has to be more than what both parties are actually proposing at this point in time. So this is going to make both parties step up and kind of broaden their horizon about what gets put in, where money is allocated to, and then certain industries and people will be getting more money than they had or than Congress had originally anticipated. The consumer price index numbers are going to feed into that because it's an economic number, it's an economic indicator. It's going to be showing us the track for inflation, and then also what the future track could be for spending for citizens. Because if prices are going up, wages are stagnant or dropping, then people are going to be less likely to buy, which means that the economy is going to be moving fairly flat. And obviously, that's not good, and that's why we need the stimulus. Having bad CPI numbers would actually make the market go up. So if you go back and look over the past several weeks, anytime we've gotten a bad number or a number that has missed the market has gone up. The market has gone up because the market is anticipating that every time we get bad news, that's going to push Congress further towards getting us a stimulus package. So bad news is actually good news right now. Doesn't make a whole lot of sense. Um, that's just how the market sentiment works. It's something that fundamentals can't help you with. It's something that technicals really can't help you with. That's that third element of the market that's there. We don't talk about it all that often, but it's the psychology of the market. It's how it's what people are anticipating and feel is the fear and greed factor of the market. So that's why those numbers are going to be important tomorrow. The numbers that come out Wednesday are going to be equally as important because they're the PPI numbers. So you can think of it as being a consumer price index number for businesses and for industry. That comes out on Wednesday, followed by Australian employment. So we'll be getting those numbers actually during the Zoom call on Wednesday. So Wednesday, when we're on the Zoom call, um, if we start at 8:15, then I'll probably stop around 8:30 and we'll look at what the news is, talk about it as the news actually comes out, and then possibly can look at the chart. For those who aren't experienced with seeing news come out and how it affects the market, you can see it in real time. Thursday. Thursday, we get our unemployment claims, we get Philly Fed manufacturing numbers. Those are going to be important. Natural gas numbers, even though right now the news is yellow, and the news is yellow for crude oil, those numbers are going to start being a little bit more important um, as the temperature gets colder. Right now is the time of the year where they really ramp up the transition between summer blend, winter blend, where you get the increase of heating oils being produced. Um, Also, for anybody on here that follows natural gas hit like a low. And when I say a low, I mean like it dug itself a hole. Um, a lot of it was because of the hurricane season, even though um, a lot of the platforms switched over to natural gas. A lot of those rigs just ended up closing anyway. And then several of those companies down in the Gulf are actually merging together. So they're not mergers you're going to hear about on the news because, as far as the stock is concerned, the companies only trade about 5 million shares or so a day. So it's not a whole lot. So they're small to low level mid-sized companies, but that's going to be a big deal because it's really going to help the U.S. have a bigger impact in the oil market when it comes to Middle Eastern talks. Um, so I tell you all that to say pay attention to oil prices, pay attention to gas prices, pay attention to natural gas prices, because all of these things at some point in time are all going to start steering back towards OPEC meetings that are coming up, and then just also the opening up and growth of the economy. So moving along, on Thursday, there's going to be quite a few Fed member speeches. They're not Jerome Powell level speeches, so they're not going to be, those speeches are never going to be orange or red unless they're speaking before Jerome Powell and before some very important news comes out. And there are only certain Fed members that they allow to do that. the Atlanta Fed, the New York Fed, and sometimes the St. Louis Fed are the only three Fed regions that they really allow to speak before Jerome Powell, or Fed members who actually align with the beliefs of Jerome Powell so that they don't push the markets too far one way or the other. Um, those of you who were on the call with us last year when Jerome Powell was making a lot of the speeches towards the end of the year, especially like August, September, there were a lot of Fed members who didn't agree with him and they spoke before him, and or one Fed member spoke before him. The markets thought that he agreed with Jerome Powell. He didn't, and every word that he said like moved the market. So they're trying to avoid that now. They've done a pretty good job, but um, those speeches that are coming out on Thursday shouldn't really move the market all that much because all of the Fed members actually agree for a change on what the plan is for the dollar. So Friday we have core retail sales and we have consumer sentiment. These numbers are going to be super important. They are marked according to how I think that they will be interpreted. Also, preliminary inflation expectations, even though it's not orange or red, it's still important because obviously these economic numbers we're using are measuring inflation, growth of the economy, and potential growth in the future. And core retail sales, we're in October. These are month over month. So we're kind of getting into that season now where people are starting to holiday shop. So these numbers are going to be super important to show us what holiday spending could potentially be like. So not so much this number. I mean, we could see a little bit of holiday shopping in this number, but definitely the number that comes out in November because we'll be looking at October, and then the number that comes out in December because we'll be looking at November. So November will it will have like the mid fall, Halloween, Black Friday shopping number. So if the December number isn't good, you can already anticipate that the January number for Christmas time shopping isn't going to be all that great. I don't think that Congress is going to wait that late to try to get a stimulus package. And I hope they don't wait. Because essentially the quicker you can get a stimulus package in, the better. So speaking of stimulus package, it's not on here, but there are a lot of huge investment banks, a lot of banks that do underwriting who have predicted a drop or a fall in the dollar, who have been putting in futures to short the dollar because of COVID-19 and because of the fact that Joe Biden is actually gaining a lot of traction in the polls against Donald Trump. So why does that matter for the dollar? Because if you look at their policies, I don't care. I do care, but I have to phrase this the right way. From a financial standpoint, I don't care about personal views of candidates. If I'm looking at strictly financial, if I'm looking at strictly money, if I'm looking at strictly how is this going to impact the money of in flowing in the economy, the money flowing in a citizen's pocket, you have to look at the policies. And what they're looking at right now and what they're seeing is that, like I just said, Biden has gained some more traction, I should say, against Trump in the polls. But if you look at Biden's policies, they're horrible for the dollar. So it does not matter if people feel like, oh, Biden can help put more money in my pocket. It's going to be worthless because inflation at that point is going to be high. The Fed has already told us that they're willing to let the economy run hot, which a lot of people don't know what that means, but it pretty much means that the economy runs away from us and we can't control it, we'll let it happen for a while. It's okay. It's pretty much what they're saying. It's like being in a car at the top of a hill and putting your car in neutral and getting out and letting your car just roll down the hill and be like, I'm gonna let my car roll for a little bit and then I'm gonna chase it and get in it and then stop it. It sounds dumb, right? Okay, well, that's what the Fed is doing with the economy. That's what they've already told us, period, point blank, that they're willing to do. So, because of that mentality that the market has already priced in, and because of the fact that a lot of Biden's policies include printing a lot of money and taxes on the rich have never worked for the economy. You can go back, look at any president you want to look at. It's never worked. It's always made the economy contract. It's always made people not want to spend money because the money never gets to where it's supposed to go. And the big banks are seeing, okay, Biden's gaining more percentages in these polls. People who are actually submitting ballots. Some of these ballots, most of them shouldn't have been counted, but they're asking people in these polls who have already voted and some who haven't voted, like, what is your outlook? What are you thinking? What candidate's the best for you? Biden's gaining traction. A lot of people can say that Trump's policies are about printing money. Yes, but at the same time, we have, while I don't agree with weaponizing them, tariffs in place to help balance out any runaway spending that happens. So I feel like in that position as president, especially whenever you're doing a lot of things that are going on now, you have to find a really nice balancing act. The other thing the market is pricing in is the fact that Biden was a vice president during an administration that had runaway spending that wasn't controlled. Um, we can look at how the market increased during Obama's term, but I went back and looked at the balance sheet of the government and it looked horrible. Like, we had a lot of spending that wasn't made up for, and it wasn't made up in the ways that they tried to make up for it weren't beneficial for the people. Um, anyway, that's not my opinion. The economic numbers show it, the job loss shows it, the amount of um, what is the word I'm looking for? Foreclosures and repossessions showed it. And I mean, it wasn't just, I'm not just nitpicking on the last administration, it's just the last administration we have to compare it to. But Biden was the vice president during that administration and had just as much say as in the financials as anybody else did. And anyway, so that's where a lot of people have the opinions that they have when it comes to the money. I was like, oh, you were there for 8 years, but you know what happened. So anyway, those are all things that we look at when we're looking at this news. We're looking at those very things. So when I tell you guys to take notes and write stuff down, I'm not just saying it to be funny. I'm saying it because when we have another election in 4 years, you're going to want to flip back in your notebook and see, okay, what were those numbers like? Let me compare these numbers and start looking to see, like, how great were we? Like, what happened with the market, what happened with jobs, um, economic turnaround, what happened with inflation. Because while we all love a good stimulus isn't good for the value of our dollar. It isn't good for us. It isn't good for the banks. Well, I mean, it could be, but inflation runaway isn't good for a bank. So whenever these banks are talking about shorting the dollar and talking about um, really making sure that they let people know who are heavily invested with them that they need to protect their money and put it into other assets, Like, these are the things that they're looking at. These are the reasons why they're telling their clients to do things like that. And we wouldn't necessarily know unless you're paying attention to financial news to actually see it. Um, anyway, that's all I have for you guys for the news for this week. I just wanted to glance really quick at next week, not talk about anything, but just see what's coming out. Okay. All right. So that's all I have for you guys, like I said. And if you guys have any questions about anything, you can put it in the group chat or in the chat for the Zoom call. I'll answer those questions for you. And then if you have something else after the Zoom call, you can put it in the group chat and we can talk about it. But I am going to turn it over to Mr. Lovell so that he can get started with the technique.